business and look at the local markets now, and trade remains under pressure in early trade. South African markets closing in the red yesterday, weighed down by losses in precious metal sector stocks, the rand weakening against the US dollar. Let's speak now to Sithembile Bopela, an investment analyst at FNB Wealth and Investments, who joins us now. Sithembile, good morning to you and thank you very much for your time. The rand remains under pressure, reaching the 19 rand 27 to the US dollar. What's driving the decline?
Hi, Twali. Great to be speaking with you. I mean, the market has really been under pressure. We saw, the JSE end the month and the quarter that ended last week on a bit of a sour note, tracking international sentiments, and we've seen sentiments as generally being quite under pressure. A couple of developments happening on the international front. You've seen traders keeping an eye on, central bank activity, primarily the Fed's policy stance, or rather their restrictive policy stance, reiterating, the points that as much as there was a pause earlier in the last round, the central bank is expecting, or rather there are projections for a possible other rate hike later on in the year, either in November or December. Given the fact that, inflation has remained quite sticky, we are seeing inflation generally trend lower across, global markets. But, to get back to the Fed's 2% target, there is still, some room for monetary policy to tighten, and in order to get back to those target levels that the Fed is looking for. A similar, narrative across other central banks across the world. The idea that, we are seeing a lot of the central bank activity, the actions that were taken earlier have already filtered through into the real economy, but inflation, as I mentioned, still remains an upside risk.
Yeah.
And so we're seeing, currency markets reflect that as well. The dollar has strengthened quite significantly. We saw bond yields also respond in tandem to just the expectations of this higher for longer interest rates environment, or narrative that, the Fed has basically maintained. And so we are seeing that definitely in playing out in the rand. Some of the local developments as well. Yesterday, some of the PMI data disappointing, showing a contraction, quite a significant contraction in factory activity and business activity. And so a lot of that also playing into weighing down sentiments across global markets as well as locally as well.
Yeah. Let's talk about the JSE's public censure of a Namibian company called Trustco. What's the background to the story?
So it's essentially about disclosure. The JSE censored, Trustco over its failure to inform shareholders about the effects of a change in the terms of a loan that was linked to its CEO, Quinton van Rooyen. And so effectively, the company Trustco acquired a diamond mining and exploration company called Uso Investments, and so that was funded through equity and loans. The issue isn't so much on the structure itself, but rather on the reporting. The change in the classification of that equity loan into a liability on Trustco's books, that changed the net asset value, or the NAV, of the target company that was acquired. And so as a shareholder, you want to have all the information and the transparency, rather, the full knowledge and transparency about the deals that, the companies that you invested in and the executive decisions that are being made there. And so, it changed because it changed the valuation fundamentals of that target company.
Yeah. It's
something that shareholders should have definitely been informed of. And so it doesn't bode well for Trustco in just that regard, because, it's really following, an already difficult history with the stock exchange being quite strict and punitive to companies that aren't sticking to the regulations about full disclosure to shareholders.
Interesting developments there. All right, let's talk about company news now. And indeed, Dunlop Tires South Africa, the owner, that is, is backing the Japanese giant, that's Sumitomo Rubber Industries, and there's an amount of 1.7 billion rand in investment into the expansion of the local tire production industry. Talk us through those developments.
Yeah, so it's an interesting development. As you mentioned, they are investing quite a hefty sum of money into expanding that production facility. And effectively, the part of the rationale of the investment into the new Ladysmith plant is to make it more sustainable. It's going to cut down on costs and waste, and as well as power consumption, and which is something that, in our local context is very important given our current electricity crisis. And so I think the investments really bodes well for, the local industry in general, because, not only of it strengthening the supply side of the fundamentals of the industry, but also, the impact that has for employment. We know that, the auto industry is a very significant, a very strong economic sector of the South African market. And so these positive developments, which also is following on from, further investments by another U.S. Company that, has also invested quite a hefty amount of money into the auto sector, because generally the underlying fundamentals are quite supportive. South African demographics are quite supportive. We're seeing, an expanding population and an expanding middle income or middle class, and so you're seeing demand for vehicles and for cars picking up quite strongly. And this is despite, the existing economic headwinds, or rather the tighter economic conditions, higher interest rates, higher inflation that consumers are facing. Recent economic data and some of the stats have been quite supportive, showing that, the auto industry has been quite resilient despite, some of the macroeconomic challenges that are being faced. So a rather positive development on that front.
Well, that's good news indeed. All right, let's conclude the conversation with this particular story. The Dutch competition watchdog, that's ACM, rejecting objections by Apple, and this is against fines of $53 million it gave the company over the failure to comply with orders to limit the dominant position of Apple's app stores. It's slightly complicated, but you'll simplify it for us. Talk us through those developments and what happens next.
So yeah, I think you've really covered the story there. I think one of the historic challenges for Apple, because of its iOS system, has always been around it being more competitive. We do know that it is quite a relatively more exclusive operating system compared to Android, which is perceived to be a lot more competitive in that it easily enables competitor apps to be installed and utilized on the system, whereas with iOS it's a little bit more nuanced than some of the other Android systems. And so Apple's argument, as far as ACM's ruling is concerned, was that the regulator essentially has overstated, or rather in terms of defining their relevant markets and so their relevant market share. This is around the dating apps, the specific story. And so Apple has argued that, they've incorrectly defined the relevant markets, and they've overestimated the dominance of Apple's position in the dating app markets. And so they've stated that the order effectively degrades investment incentives for the applications, and it's not necessarily according to Apple, it's not necessarily in the best interest of its users' privacy and data security. And so there are arguments from Apple's perspective saying that the competition watchdog has been extremely punitive in how it has basically looked at this case and how it has imposed this fine on Apple. And so they're essentially looking to appeal the matter to the Dutch courts. And so, yeah, it's a developing story at this point, and it's likely I assume, to have some overhang on, the possible sentiments around the stock until this matter is resolved.
Sithembile Bopela, thank you very much for explaining that to us so well. An investment analyst at FNB Wealth and Investments.